Okay, so as I said, there will be a few people still kind of filtering in, but just in the interest of time, I do want to get going quite quickly. So my name is Grace, for those of you who haven't met me before. Towards the end of the session, I will give you a link, and that link is to our on-demand CII courses. We do have an I10 version of this particular course, and because those of you who are joining us one of the Fridays before Christmas, and you've put the effort into coming here live, you are welcome to get free access to this particular course for the weekend. So I will remind you of how to do that towards the end of today's session, but my colleague Lily, who is waiting in the session as well, will receive any email addresses from you who wants to be signed up for the weekend. So just please do private message my colleague Lily, and she will give you access to that for the weekend. Okay. Good. And as I said, I will make sure I remind you at the end as well. So welcome, everyone. I'm going to skip straight over to the slides. As I said, I'm going to keep an eye on the waiting room because I think we've got a few others still to join. But as I said, it is Friday, so I'll get going just in the interest of time. You should be able to see what you need to know in your screen now. So we do these sessions every month. We focus on a different book. And today we're thinking about broking. So Insurance Fundamentals of Broking. A very nice book generally. It's got 7 chapters in it. And if those of you who are maybe doing this book to finish your CII, you might breathe a sigh of relief as you open this book up and you think, oh, you know, it's a little bit shorter than those that you might have done previously. So we'll be going through this. The point of today's session is for me to highlight just a few kind of quick snap things that I think that you should know for the exam, and just tell you some of the areas to kind of focus in on as well. But as I said, you will get access to the whole free course if you want to for this weekend, which goes through it in a lot more detail than what we're doing today. All the slides that you will see today are within that course. And so don't worry about taking copious notes. You'll get access to all of this if you do sign up through that. Okay, so let's get going. Let's just very first of all do a little bit of a pit stop towards the learning outcomes. So there are, as I said, 7 chapters, but there are only 6 learning outcomes. Now, the reason that I look at these first is because you can see on the questions on the right-hand side, the rough number of questions that you will see within the exam for that particular area. So for example, learning outcome 1 is chapter 1. There are 12 questions roughly attached to that particular one. If I draw your attention just slightly downwards towards learning outcome 6, understanding the issues relating to conduct and culture of the insurance broking business, you'll see that there are 10 case study related questions. For those of you who have done LM2, you'll be very much in the knowledge and the formatting of LM2, of the case study kind of questions and how they work. For those of you who haven't seen them yet, don't worry. I'll give you an exam guide towards the end of today's session that will actually just let you know how that works. So essentially what it is a scenario, and then they ask you multiple choice questions based on that scenario. So in total, there are 65 multiple choice questions, which I call standard, and that is just one answer out of 4, no scenario, they're just kind of questions. And then there are 2 case studies, which is the scenario, and they each have 5 questions relating to that particular case study. So as I said, have a little bit of a practice on the past papers to make sure you're happy with how those are outlined. I will be a few more people still joining us, which is lovely, but I will be taking questions primarily at the end of this particular session. So do hold on to them, just jot them down for now. I will open up the chat just in case anyone does get a little bit stuck, then they can just let me know and flag me down. But otherwise, we're going to keep kind of plowing through these chapters. Okay, so let's get going. Chapter 1. Hopefully, as I said, some of this stuff is going to be a little bit more of a reminder for you. It really does depend on which books you've taken previously. So if you've taken LM1 and LM2, you're probably in good stead when they start talking about the Lloyds stuff. If you've taken IF1, then you'll be knowing about the agency and the principle of the law of agency, which we'll be talking about in this chapter and in chapter 4. So the whole premise of a broker, most of you probably are brokers, and so I feel a little bit patronizing telling you what you do in your jobs, but ultimately the insurance market needs brokers. They've pretty much always been around since Lloyds was a coffee house back in the day in the 17th century. They were needed to go out and get the business and bring it into the underwriters. They are essentially the middle person, the middleman or woman, who allows you to be connected as an insured to an insurer, and then you form a contract. The broker is never party to the contract. they simply and merely facilitate it. So you're just thinking about all of those kind of areas. We generally refer to them as intermediaries. You can see throughout the book that they have lots of different names. We'll call them brokers, agents, go-betweens, but generally intermediaries is the correct kind of term for what we're talking about. And the ultimate kind of goal of an intermediary really is to make sure that they are giving independent advice to their client, who is ultimately the insured. Okay, welcome if you're just joining us. You haven't missed much yet. We're only on the first slide, so please don't worry. So in terms of the actual kind of the structure, if you like, of the relationship, a client would go to a broker when they've got a risk to be placed. That broker then would liaise with the insurer. And then, as I mentioned, the contract then gets formed between the two parties, so the insured and the insurer. In terms of how the broker gets remunerated, we'll look at that a little bit now, but then also a little bit later as well. Generally, I would say, and as I say generally, you are paid, and for those of you doing day-to-day business, you would normally be seeing a brokerage or a form of commission that gets taken off of the premium. That's quite common in the London market, but there are instances where we have a direct fee from the insured possibly to actually place the business in the first instance. You might start to see a bit more of a fee from an insurer's perspective if perhaps the premium is very substantial. So, for example, I know a particular broker who, when a particular premium gets to about £50,000, they then go on a fee basis rather than a commission. And it's all about kind of working out the best interests of the client themselves. So a few other kind of bits and pieces in terms of regulation and legislation, although we will be doing chapter 5, which is obviously packed solid of that a bit later. Insurance Brokers Registration Act 1977, believe it or not, was the first piece of legislation that actually defined what an insurance broker does. And so that is a real key piece of legislation that I've just pointed out there. Just to remind you, the FCA, if you remember from your previous books, the Financial Conduct Authority, is the ultimate body who oversees and governs brokers. And so primarily from a conduct perspective, but as we'll see later on as well, they actually authorize brokers as well. Now, just before we move on, just to mention BIBA and LIBA. We'll be at BIBA next year, so that's coming soon. For those of you who are new to the industry, you might go to the BIBA conference. I believe it is in May next year. That stands for the British Insurance Brokers Association. They also have a committee called LMRC that attaches to them. And essentially, they are looking out to make sure that British insurers are upholding certain standards. Very similar, their partner in crime, a slightly separate body, but otherwise, from an international perspective, the London International Insurance Brokers Association, or LIBA, which again do it much more on a global basis. So we're all about making sure that the integrity of brokers is upheld across the entire marketplace. Now, why actually have a broker? Are there benefits? Is it reasonable that you would do direct business? Yes, of course, but having a broker really does come with a number of benefits, as we'll see, and a lot of value add services these days as well. In terms of the benefits for the insured, on the left-hand side, it's convenient. As an insured, you don't want to spend oodles of time looking for insurance. You get to channel the broker's expert knowledge, and then hopefully as well, you get some kind of independent quotation from that. If it's a particularly complex product, as we'll see in a moment, you might very well need a broker to kind of piece together the program for you. The broker, depending on their capabilities and kind of the role that they're going to play, they might also assist you quite heavily with claims, and they might kind of, are likely to present your claim to insurers. And then generally as well, you tend to have kind of an existing relationship. If you're a broker for a particular client, you tend to be their broker over a period of time, unless the client likes to switch brokers every so often. But ultimately, you're there for the long term, and you're, as we'll see, providing other services as well. For the insurer's perspective, again, it's a lot more kind of straightforward. Convenience is there as well. Technical expertise. So if you're a D&O broker, directors and officers, then ultimately you're going to want to channel that and actually get to D&O underwriters who you have a relationship with. Also, insurers like to know that there's somebody else in the transaction, kind of double checking everything. And so you've got peace of mind on that sense. And there are certain cost benefits to going through a broker. Obviously, you have to pay brokerage, but ultimately, if you were doing business direct, you'd have to pay for very substantial advertising fees and so on. So there is a lot to going via a broker. Now, I mentioned a little while ago, some actual kind of areas of business lend themselves a little bit more appropriately to certain kind of broking transactions, if you like. So from the concept of a personal lines broker, there are still those out there. That we used to have them called agents, and they would very much be kind of high street brokers, but actually aggregators have kind of taken a lot of that business away from brokers now. So generally, because the buyers are consumers, brokers have to be very much more careful when placing personal lines. But that said, personal lines are a little bit easier to go direct with. Commercial insurance, you can go direct, but it's actually much more beneficial to use a broker because they'll be able to pick out all of your individual commercial needs. And then obviously you have their expertise to kind of fall back on should there be any problems later on, which we'll come on to at the final chapter today. And then very much for specialist risks. So if you've got a particular risk that you need a tailored approach to, chances are you're going to need some kind of expert broker as well. And so they are very prevalent in that area. Now, I'm going to take you through a little bit of kind of the journey, if you like, of what the broker will do. Then I'll do it from a Lloyds perspective. And then just to finish off this chapter, we'll talk a little bit around some of the kind of the regulation areas and legislation in this area too. So as a broker, your role is first of all to decide which market is best in terms of how you place the risk. Then there'll be kind of a little negotiation, a little dance between you and the underwriter in terms of looking at the actual conditions that they want to put into the policy or you want to put into the policy. And so there'll be that negotiation period. As soon as that happens, you're able to then go back to your client, give them details of the policy wording and actually talk about your negotiations. At every stage of this process, you need to be keeping in mind as a broker, am I doing what the client needs? Have I got their needs in my mind as opposed to the commission and everything else? And we'll keep coming back to that point as we go on today. And then once the policy is incepted and it's in full swing, hopefully you only get called there and now out of the blue to maybe do a few midterm adjustments, a few renewals perhaps, and then ultimately your job as broker can kind of continue on as long as everybody's happy. You will also, if the client has a claim and contacts you, have to kind of probably advise the client on, first of all, maybe not the validity of the claim, depending on your relationship with underwriters, you might want insurers to do that for you. But ultimately, you should be able to tell the client what they need to present to underwriters in order for the claim to be considered. And then ultimately, if you've got a very complex area and a very complex kind of insurance program, you as the broker need to get a bit creative and you need to design that for them. So we'll talk more about that in a couple of chapters' time. In terms of the Lloyds process, quite similar in terms of the kind of the to and fro that happens, but just so that you're aware, for those of you who aren't working in the Lloyds market, you might be much more kind of listening to the terms slip and market reform contract and lines and sign lines and written lines and all of these things. If you did LM2, this puts you in very good stead for this particular part of the book, but don't worry, just read it through, highlight what you need to if you're not familiar with Lloyds. But they talk a little bit about how to present the material circumstances. Normally would be done on a slip, which is just essentially the broker collating all the information to set out to seek a leader of the insurance from an underwriter's perspective. The broker generally has an order, which is majority of the time 100% to place, but sometimes they oversubscribe and they need to go through a process that we call signing down, which is proportionately reducing every underwriter that is on the policy in terms of their line size. Remember, the London market is generally a subscription market, and therefore there are often lots of co-insurers on one particular risk. Once that's all done, the quote is then presented for the insured to either accept or reject. And then when the risk is bound, we call the lines. And like the reason I'm doing that is because historically they would have been inked. And so they still are kind of inked, as you say, when the underwriter says, yep, we're signing up to this particular risk, everything's ready to go ahead. And then once everything is recorded, all the documents go to the client, but then also submitted to exchanging. So exchanging insure services, which is a central database that allows all the risks to be recorded. Just so that you're aware, obviously this is the traditional format and you would be doing it face-to-face, but these days, because of, well, prior to coronavirus, we had PPL, but essentially a lot of this is now being done online, especially since lockdown and coronavirus. So we have Placing Platform Limited that allows us to do that. Okay, so we're pretty much kind of nearly there on chapter 1. I know there's a lot of information, and apologies, we are going at a speed, but it's just in making sure that we get all 7 chapters done within this session. So a few last things to just kind of mention here. We talked a little bit about value-added services. Now, what are these? Some of the bigger brokers in the London market will not just offer broking services, but they actually differentiate themselves as brokers by saying, you know what, we can actually do this for you as well. And so that might include, running property surveys, or certainly these days is much needed business continuity planning, in lockdown, out of lockdown, who knows? Health and safety, different kind of post-loss surveys. All of these can be services offered to the insured to basically say, as a broker, that you're doing a lot more for your money. In terms of the actual services that you're providing to insurers, it depends on your authority, but most of the time, you'll have some kind of agreement for perhaps issuing documentation. You will primarily be responsible for the premium collection from the client. And then again, depending on what you're authorized to do, you might have support with kind of the management of any claims as well. One of the biggest themes that is running through this book, I have to say, is that of transparency. Now, the spotlight has been shone on brokers very much over the last, I'd say, 7 years, certainly in the US, but also here as well. Basically making sure that the client is fully aware of their rights and fully aware of what the broker is doing and what they're not doing and what money they're earning. So just so that you're aware, obviously we have the commissions coming in from the insurers, but sometimes there are also volume overriders or contingent commissions that insurers offer as well. And that's basically making sure that the policyholder might not be aware of the fact that the insured, the broker is actually getting extra funds from putting business in the direction of the underwriter. So anything like this has to be disclosed